Welcome to Electrified. It's your host, Dylan Loomis. Back on January 25th of this year, Tesla was pushing $900 a share, hitting $895. Just 2 months and 6 days later, it is now hovering around $660 per share. Doing the math, Tesla is 26% off of its highs, and you can attribute this to sector rotation or money leaving tech due to interest rates rising or lower expected Q1 deliveries due to the chip shortages or really any other number of factors. And today, Tesla sits at a market cap of $632 billion. At some point in the next 12 to 24 months, this window of purchasing Tesla at a discount will be closed, potentially for good, outside of another black swan type of event. And look, I know all too well some of you out there are wondering what's going on with Tesla, and you're in a state of semi-panic with your Tesla stock holdings. So I want this to serve as a reminder that if you have the ability and desire to own more Tesla shares, now is actually a great time to make the moves you need to in order to accumulate more shares. This is not the time to be fearful, and here's why. Sometime in the next 2 years, it's very possible that Tesla solves for full self-driving. There's plenty of uncertainty as to what will happen when that happens, given regulations and Tesla's corporate decisions. Don't forget, Elon has said previously that Tesla would stop selling cars at consumer pricing once full self-driving is solved, and he was pretty clear responding to this tweet back in the summer of 2019. Now, no need to panic, there is still the simple option of Tesla selling cars like they do now with FSD as an add-on, which was confirmed by a later follow-up tweet. But there is also a real possibility Tesla makes a decision that makes it difficult for the average consumer to buy a Tesla depending on how high that clearing price would rise. Moving away from human drivers as soon as possible, which has been, by the way, the goal all along, is something I wouldn't rule out. And perhaps we've forgotten about this slide from Autonomy Day, where Tesla laid out some super ambitious projections, noting that a robotaxi could generate $30,000 of gross profit annually based on 90,000 annual miles. And Elon did justify on the Q4 2020 conference call, saying there is a roadmap to potentially justify Tesla's market cap, which was over $800 billion at the time. It was pretty simple. Tesla should reach $50 to $60 billion in annual car sale revenue, as they did $9.3 billion in automotive revenue in Q4 2020, and we know Tesla expects vehicle deliveries to increase about 50% per year going forward. Once FSD is solved, usage of each Tesla could go from 12 hours a week to 60 hours a week. Elon said if you made $50 billion worth of cars, it would be like having $50 billion of incremental profit, basically because it's just software, referring to FSD. Based on that formula, Elon said a 20x earnings multiple would lead to a $1 trillion market cap, and the company would still be in high growth mode. And I want to remind us all that as Tesla's FSD project is released to a wider audience, it's going to be put under a microscope even more, and the public scrutiny and criticism is going to become deafening. Everyone needs to know and expect this, as the truth is, a huge part of the public is nowhere near ready for robotaxis. I know a lot of smart people who don't trust having conversations in the same room as an Amazon Alexa, so if you think that these people are ready to trust their lives to a robot car, I have a bridge to sell you. So just be prepared for this. But to keep this car moving, we of course have the FSD subscription model coming, and that wider FSD release is on the horizon as well. Eventually, sometime in the next 2 years, there will be an inflection point where the market picks up on what solving for FSD really means to Tesla's profits, no matter how they choose to implement that technology. When this happens, Tesla will eclipse that $1 trillion market cap, and again, barring anything unforeseen, only go up from there. So this window we are seeing right now, where Tesla share prices are depressed, is probably one of the last opportunities to buy at a discount that investors will have. There are of course talks that Biden's new infrastructure plan that includes $174 billion to support the EV movement could mean that $7,500 tax credit is boosted to the $10,000 range. And this is not just speculation on my part, as Dan Ives, a Tesla analyst, and a few others have mentioned that $10,000 incentive figure as well. I personally would still bet on the figure being $7,500, but the more important note is that the new incentives are expected to be uncapped, removing that 200,000 vehicle ceiling on the credits. And other than true autonomy, the most impactful project Tesla is working on, the in-house 4680 cells, is the catalyst that will drive Tesla past that $1 trillion market cap and keep it there. And we know that Tesla's 4680 pilot line on Cato Road will be supplying certain vehicles in the near term, as Tesla is only now filing the application for approval to build lithium-ion batteries at Giga Berlin, which is expected to be filed by July this year at the latest. We know that production of vehicles at Giga Berlin is expected to begin this summer, so those vehicles will not have locally made 4680 cells when production begins. We can reasonably expect Berlin 4680 cell production to begin in 2022, and that Tesla is targeting 100 gigawatt hours of annual capacity, eventually ramping to 250 gigawatt hours down the line, which would mean between 2 and 3 million vehicles produced at Giga Berlin alone in the next 3 to 5 years. So to me, it's not hard at all to see that once these two factors, solving for FSD and scaling 4680 cell production, hit a certain point, that Tesla's stock price is going to be sent past the $1 trillion market cap, potentially for good. In just the next few years, it's pretty clear that Tesla will be delivering millions of vehicles annually, and this could be paired with autonomy being deployed in some way, shape, or form. And I really don't think I need to run through any other catalysts or tailwinds that Tesla has in the next 12 months alone. I have no clue how the stock market will react to any of this because it doesn't act in a rational way these days, but I do know that Tesla will not be trading significantly below a $1 trillion market cap for too much longer. Whether it's 1 year or 3 years, I'm not sure, but this accumulation window of buying at depressed prices could slam shut at any point. Just remember that. And real quick, if you're open to other ways of making money in today's market, specifically in the crypto space, check out my other channel, Big Idea Investing. Whether you like it or not, it's a space that's offering returns that no stock can match. I purchased OMI tokens about 2.5 weeks ago after a lot of research, and I'm up over 252%, making for a 3.5x return in just over 2 weeks. You guys know I love Tesla as a long-term hold in my portfolio, but it's not going to 3.5x from here in the next few weeks, no matter how bullish we are. The only reason I'm saying this, and I don't want to sound salesy, is that there is true life-changing wealth to be made for those doing the work in a very noisy space. So if you're interested in learning about it, feel free to check it out. But thank you guys for watching. Please like the video if you did. Until next time.